celebrate the National Small Business Week, and this is our Procurement Series, Session 3, Eliminating Barriers to Funding Your Business. I'll be your facilitator this evening as we talk about eliminating barriers to funding. My name is Ellen Harvey. I'm a certified business advisor for the Ohio Small Business Development Center at Columbus State Community College. I serve as the capital access manager there over a crowdfunding program called Kimba, in which we are partnership with the SBDC and Columbus State Community College. I have over 18 years of experience providing advising and counseling to small businesses, from startup to existing, and to those businesses that are ready to pass that business on to the next generation. I have owned my own mortgage company for 8 years prior to coming into the economic development field. And so understand those day-to-day challenges that you experience as a small business owner, have lived through a recession with the real estate industry, in which that industry crashed. And so have experienced a lot of things that many of you are going through because of the pandemic. So when I speak to you about my experiences and I'm giving you guidance and counseling, it's coming from a point of view of which I've been there, done that. So for those of you that are not familiar with the Ohio Small Business Development Center, it is an economic development entity, joined Columbus State Community College in 2004. Our particular office covers 8 counties within Central Ohio and surrounding. We are one of 29 centers in Ohio, and we are part of a national network of 1,000 offices nationwide. This is just some results that we've had in 2020 of assisting small businesses. We've advised over 1,755 small businesses. We've facilitated and helping them to obtain financing. We assisted in creation and retention of 1,031 jobs, helped start 64 new businesses, helped clients increase their sales, a general overall cumulative 14 million, and conducted over 117 trainings with 4,016 attendees. So we've been busy. At the core of who we are, we provide services, and we provide services as far as training and advising. Our one-on-one advising is provided by, business advising is provided by our certified business advisors. I am one of them. There are many of us that specialize in different fields. We also provide training events to assist you as well. Our expertise extends from business assessment evaluations to strategic business planning, cash flow analysis, financial projection, development, identifying sources of capital, loan packaging, market feasibility and research, marketing strategy and development, manufacturing and technology, and even export assistance. So we have a lot of experience and expertise in our office to assist you. Many of these skill sets are very instrumental in helping you as you are seeking funding as a small business, to help you making sure that you present a quality loan package to your lender. So you want to make sure that you're reaching out to us, as well as other resources that are available to help you start, grow, and access capital for your business. Our agencies like the Small Business Administration that is located downtown Columbus. Of course, as I've mentioned to us, we're at Columbus State Community College. SCORE, which is a confidential small business advising group. They're volunteers. They're experienced business owners that volunteer their wisdom and lessons learned. The Small Business Training Network is a program, a part of the SBA. The Women's Business Center is a facility that is open to women to be able to launch and grow their business. It's a part of the ECDI, the Economic Community Development Institute on Old Leonard Avenue. The Minority Business Assistance Center, a partner that's bringing this training to you over the next week, is located at Columbus Urban League at Mount Vernon Avenue, and of course the Columbus Chamber at 150 South French Street. So all of these, including ourselves, are great resources to help you in growing and starting your business. So this evening, we're going to talk about, again, just those challenges you might have experienced in accessing capital, trying to eliminate some of those barriers for you, helping you understand the process a little better. Asking for money, you have to be fearless. And it is one of those things that rank the highest as far as challenges that small businesses have. And so we want to break apart and break down when your business needs money, where do you begin? As we go through this presentation, feel free to ask your questions. You can leave those in the chat. If you'd like to interject, you can also feel free to take yourself off mute and ask your questions as we go along. So we're going to be talking about the loan package, some of the required content, documents, and some standard templates so that you are familiar with what is a part and expected to be in your loan package. We're going to talk about how you prepare for interviewing with the banking officer as you are presenting your loan idea to them and asking for funding, as well as some of the questions you want to ask them as well, so that you know if you in fact want to partner with them, because that's important as well too. We want to make sure that you come away from this presentation understanding and knowing the borrowing process, that you are familiar with all aspects of your business as well, that you are presenting a well-prepared loan package, and that you understand how the lender will evaluate your loan request, so what they're looking at, what they want to see, what should be in that package, and making sure that you are clearly articulating in your presentation what you're bringing to the table. So things that you need to know right off the bat is that there is no such thing as a 100% financing. So when you are seeking funding, a lot of times, I believe small businesses are under the impression of what I've experienced in working with them, that they can ask for the full amount that they're needing for starting their business. So if it takes them $50,000 to launch a barbershop, they anticipate that they should be able to go to the bank and ask for $50,000. Well, that's not the case. So banking institutions are looking for you to invest yourself, meaning that you have some skin in the game, that you've got some money that you're able to invest in your business. And so there is no such thing as 100% financing when you're seeking funding for your business. Your personal credit is just as important as any business credit. Of course, when you're just getting started, you haven't even got any business credit, right? So you're really solely relying on your personal credit history. And so it's very important that you're evaluating that you're taking time to understand what makes up your credit score, that you are addressing any type of blemishes that are on your credit report. So that would be collections and slow pays and things of that nature, so that you are presenting yourself in the best light, and that your credit history is that of being able to obtain financing. The credit history for lenders is a reflection of your character. And so that's why you want to make sure that you are addressing that before you're ever even applying for a loan. So it's just as important, even for existing businesses that are applying, that have established business credit. Often lenders are going to still be looking at your personal credit history. So it is very important. Third is that though you have now established possibly a business name, and set up your business structure and have obtained your identification number, you still are going to be required to sign personally when you are applying for a business loan. And that is for, of course, startup businesses, but that also can be requested and a part of an approval for funding from an existing business as well. I'd like to point out that there is typically no government grants that are available for individual small businesses, be them minority or women or veterans. It just is not available. And the only time that you will see that the SBA does any type of direct lending is if there is some type of disaster assistance that's being offered. So the SBA is simply a guarantor, meaning that they are backing your loan, which helps give you some leverage with the lender in helping you to get financing. With the pandemic, of course, the SBA has now done some direct lending, as well as provided some grant opportunities for existing businesses only, to assist them to stay in business, to handle their finances, to overcome loss of revenue with the EIDL programs and the Paycheck Protection Program and so forth, but that's not the normal. It's not the norm. So because you want to start your business or you've been in business for a while, and you're like, I just want a grant. You're likely not going to be able to find one of those. So as you think about funding for your business, a part of eliminating those barriers is understanding what you are asking for and being able to make sure that the lender understands what you're asking for. Often when I've sat down and spoke to businesses, they said, you know, I need some assistance with going after capital. And my first question is always, well, how much money do you need and what is the funds going to be used for? And surprisingly enough, that question throws quite a bit of people. So you really want to think about and even detail out what is the purpose of that funding, right? And so the purpose of the funds that you need for your business could be a variety of things. It doesn't have to be one thing. But if it is something specific, that can help define what kind of loans that you'll be looking at and will help you as far as your search for a lender. But it could be a combination of things as well, too. So these are some of the things that are loans are used for a small business. For example, working capital. So working capital is the funds that you need for day-to-day operations. And so that would be to take care of rent, to handle your utilities, supplies and inventory, your payroll, and even to pay yourself. Equipment. So maybe you're needing to buy a piece of equipment for your business. So that could be maybe a copier, a printing press. Maybe it's even a vehicle. So equipment could be a purpose and use for the funds. If you are an existing business and looking to expand and you're wanting to provide a new product, maybe it's a product launch, you're needing to put money towards development, marketing and rebranding. So again, if you're needing to have some marketing collateral developed, maybe you're needing to create a website. And then of course, if you are a startup business, just the general startup cost. So that money might be your first month's rent and security deposit. That could be the build out of your space. If you're having a brick and mortar location, it could be the initial development of your website. And so all of these things can be a purpose for the funding that you're requesting. And you would break down how your money would be spent, distributed from your funding. And so if we use the example I'd mentioned of $50,000 for a barbershop, and we say it's a startup, right? We could have a certain amount of money allocated towards buying chairs and having some plumbing done and having the space rehabbed so that it is conducive to having a barbershop. And so all those costs that go along with that and creating a new website and so forth to advertise are all a part of startup. And then if there's any equipment that needs to be purchased that goes along with that. Again, you can break that out from the 50,000 to say, 5,000 for certain equipment and so forth. And then working capital. You always want to make sure that you're building working capital into your transactions to handle the day-to-day expenses, the month-to-month expenses, and even when launching new products or services to handle potentially new staff that you need to pay for, payroll and so forth. So all of these things need to be given due consideration. Thought needs to be put into them, and then you can break down what those costs would be for each one of them. And doing that process and taking these steps will help you in determining how much your loan request will actually be for. And so that brings me to what are the use of those funds and what is that? How much money do you need, right? So it's not a random number that you pick out of your head, right? It's something that you've put pen to paper to, and you've come up with, this is the amount that I'm needing. This is the amount that I need to launch or expand to be able to survive for a certain period of time while I'm developing, while you're developing customers and bringing in revenue. And so you want to make sure that it's clear as far as how much money you need, and you're able to then explain that to your loan officer. Again, remembering that your funding is not going to be 100% financed. Again, referring to the barbershop and the $50,000. If a barbershop were to come to a bank or credit union and ask for $50,000, there's going to be a certain expectation from the lender that they have a certain amount of money that they are willing to invest as well, right? That they believe in themselves, they've saved up some money, and they have at least minimum 10% of their own money that they have to invest. And so in that $50,000 scenario, $5,000 set to the side. And so a part of your request when you're talking to a bank is that you have a certain amount of money yourself that you're going to be using to launch or grow your business when you're asking for funding. You can finance some salary for yourself. Again, that's going to fall underneath working capital. In financing a salary into the use of the funds and to the funds that you need, it really shouldn't be a year's worth of salary, right? Because there's an expectation that you're going to be starting to generate revenue and you're going to have money coming in from the sale of your product or service. And those funds coming in will be able to take care of your day-to-day expenses and your salary. And so you want to show, as we go later on and talk about financials, that you do have money that starts to come into the business after a period of time. That money is going to be able to sustain you going forward. And in the meantime, you've set aside a certain amount of working capital to get you started, which can include your salary. Another part of understanding and eliminating some of these barriers to funding is just the knowledge that you have as you are preparing for this process. And so we talked about that your personal credit is important. We've discussed that you have to define what the use of the funds is going to be used for. Excuse me, it's been a long day. You also want to determine what your loan amount is going to be, your request that you're asking for, the funding that you need, and the projection as far as the amount of money that you're going to be able to invest in the company yourself. And then another part of what the lenders will be looking for is collateral. So collateral, something that you're able to pledge in addition to the money that you're able to invest, that is going to help them feel comfortable in providing this financing for you for your business. That it is something that if you should go in default, unfortunately, or lose the business, that they have something that they're able to sell to be able to recoup some of the money they've invested in you to be able to pay down your loan. And so collateral for lenders can be the equipment that you buy. For instance, we're looking at the van there. If you were buying a piece of real estate, a commercial piece of real estate, it could be the building itself. For some businesses, you have contracts that are you have signed for a year or numerous years that guarantees a certain amount of income coming in. Those contracts can be pledged and used as collateral as well. Inventory can be used as collateral, and other equipment, large pieces of equipment, as we think about a dentist's office, the chairs and the different x-ray machines and so forth that they have. And even a 401k under certain programs can be used as collateral to help you with financing for your business. And then of course, you yourself, you can be collateral for your business as a personal guarantor. And again, that's something that is typically required by most lenders. And simply what that means is that you are co-signing for your business. Your business, as you establish its name and you establish its structure and you get it its tax identification number and you start developing its mission statement and vision statement, is creating its own character. It is as if it is its own person. And so when your business is applying for a loan, they are looking at your business name, and the EIN is the same as its social and how it's structured and so forth, and who all the owners are. And you then sign as if you were co-signed for a sister or a brother or a child on the loan, so that if that business were to go into default, then you would be held personally responsible for that. I know as we talk to small business owners about establishing their business structures, we talk about limited liability companies, we talk about S corporations, all are structures to help you separate yourself personally from the business. But even when in doing so, when it comes to financing, the lender again is often going to ask for you to sign. And so with that, that separation is only to the extent that the business is able to repay that debt. Part of this equation as you're seeking funding, understanding the process, is understanding really what is your loan payment going to be and how will that affect your cash flow, the amount of money that you have coming in from the sales of your products or services to the amount of money going out, of which a large portion of that is going to be your payment on your loan that you take out to start or grow your business. You always want to be talking about how you're going to be able to repay that payment and have some understanding of what that payment might be. And in doing so, that comes through conversations with your lender, conversations and understanding what kind of types and terms of loans that they offer. These are through questions when you sit down and speak to your lender about what it is that you would like to do, what kind of funding that you're going to need, to talk about what kind of programs that they offer. The type of loan could be a loan that's called a fixed loan, which means you're only borrowing money for a certain period of time, or it could be a line of credit, a business line of credit, meaning it works the same as a credit card. As you pay that line back, those funds become available to you again for a certain period of time. The term of a loan is how long that you have to repay that loan, depending on the type of loan and what it's being used for, and if there's an asset involved, asset being some collateral and so forth. Terms range from 1 year, 3, 5, 7, and even up to 10 years as far as repayments. That with the interest rate, which again, these are conversations you want to have with the lender so you can determine and have an idea of what your payment will be, determines what you're going to have to pay out monthly, right? So you want to make sure that you have an understanding of what types of loans the lenders offer, what the terms are, as far as how long you have to repay that. And then lastly, if there are any fees. So we talked about, as a business owner, you have to put some money into the transaction, some money that you've set aside into savings as your investment. And so that could be a minimum amount of 10%. But with some financing, there is also fees that are involved as well that you would have to pay up front. Again, conversations that you want to have with your lender as far as what is to be expected of you, as far as the fees that you might have to pay in pursuing this process of getting funding. There are 3 major components of a loan package that express the character of your business. So as I mentioned a little earlier, is that your business is its own person and it has its own character. And that is expressed through your statement of purpose, which is really your executive summary of your business plan. If you've not done a business plan yet, the executive summary just really pulls everything together about your business, what kind of business it is, if you're product or service based, who the owner is, your location, what you'll be selling, how you intend to sell it, and who your market is. It's really just a wrap up of everything that's going on with your business. The business plan itself, so that core document that walks the lender through your idea, again, the concept, why there's a need, what you're addressing that need with, that product or service, how that's being developed, the image and character of the company, which is the mission, vision, and value, how you're going to price your product, how that's going to be placed in the marketplace. Is it going to be from a value standpoint? Is it going to be that of quality and maybe expensive? Who your market is, how you're going to reach that market, what kind of money you'll be able to generate, and how that's going to be able to provide you revenue, and you handle your expenses, and then ultimately, right, how you're able to repay the loan that you're requesting. All of that is a part of your business plan. And then lastly, your financial statements. Your financial statements are the financial records that show the healthiness of your business. If you are an existing business, they're referring to tax returns and some other items that we'll touch on. And for startup businesses, these are documents that you're projecting off of the costs that you've determined that you will charge for your product or service and the amount of sales that you're going to make. And these financial documents that are a part of any package that you should be prepared to be able to present to a lender and helping you to have a little simpler process in applying for funding are these 4 financial statements. The personal financial statement, the cash flow statement, the income statement, also referred to as the profit and loss statement often, and the balance sheet help show and project the financial history, the financial future and history of a business, depending on what stage of business you are, if you're a startup or existing. So a personal financial statement is about you personally. And so this really has nothing to do with the business at all. This is about your personal finances. And it's simply an evaluation of your assets and your liabilities. And so here's an example of one. Depending on your lending institution, this could be a part of your application. This could be a standalone document, but it's basically the same. It is in a collection of data in regards to your assets and regards to your liabilities. This is used in helping to assess your ability and your credit worthiness as a personal guarantor. So as I mentioned a few times, is that the lenders are often going to be looking for you to sign as a personal guarantor or a co-borrower on a business transaction for funding for your business. And so this is just really a recap of assets. So these are things like your checking and savings account. Again, your personal, this is not your business. Retirement accounts, if you have life insurance policies with cash value, stocks and bonds, any real estate that you own. Often this is only looking for investment type real estate. These forms always have instructions that go along with them to help guide you through the process. But we can also assist you as well as the Minority Business Assistance Center and some of the other resources that I provided to you. The liabilities are not your utilities, not those types of things, but installment loans, signature loans, your, of course, mortgage, your credit cards, those kinds of things are what is on your personal financial statement. The income statement or the profit and loss statement. Now, this is in regards to your business. And so this is really your business's personal financial statement for the most part. It is the amount of income you have going in and your expenses going out, and it's over a specific period of time, typically 6 months, and it measures all the income minus out the expenses to arrive at an amount if you are profitable or if you are experiencing a loss. For those of you that have been in business and have filed, if you are sole proprietors or limited liability company, sole owners, and you have filed a Schedule C, if you look at the top of that Schedule C, you will see that it says profit and loss statement. Bet you didn't know that. So really that Schedule C is just really a recap of the amount of money you've brought in to the expenses you have going out to show your profit or loss. And so for this example, we show gross sales of 40,000. We show some expenses going out of 16,460, and we show net operating income of 23,540. These documents, if you are an existing owner, you can typically pull from your accounting software. So if you have QuickBooks or something like that, you can get it from there. You can get it from your accountant or your bookkeeper who can provide and generate these documents for you. For those of you who are starting businesses and are not familiar with how to pull these documents together, the resources that we've mentioned this evening can assist you in helping you to create these financial documents. So I don't want you to think that you're alone in these processes of trying to pull all this together because you have numerous resources here in Columbus to assist you. The balance sheet just represents the basic accounting equation of assets minus liabilities, and it shows the net worth of the business. It's a little different than the income statement as it is showing the ebb and flows of a business. So in this, the thing to know about a balance sheet is that it's supposed to balance at the end of the day. So for all assets that are acquired, something had to happen in the liability section for you to acquire that asset. So if you have accounts receivable, meaning that you have people that owe you money, then you probably had to pay some payroll out because you had to pay your team to be able to help in selling or providing your service. And that's what generated the accounts receivable that gave you the $4,000 in income coming in. And so what we see over here on the liability section that goes along with that then is $5,600 and I'm sorry, $1,400 in payroll taxes and some other things that are going on that help in generating those accounts receivable. And so when you're looking at the balance sheet, the thing that you should always remember is that it should balance. And so though you may not be able to create this document yourself, again, we can help you, your accountant, so forth, bookkeeper should be able to create this for you, is that if you are evaluating and you're taking a quick look at it, if it doesn't balance, then there's something wrong. The document is not correct. Again, this with the profit and loss statement, with the personal financial statement, all are part of some of the documents that will be a part of your loan package that you should be familiar with and always have readily available. The last, and I think the most important document is your cash flow statement. It's used to monitor and project incoming and outgoing cash, typically on a monthly basis, and it helps you and the lender determine how much your cash your business will have on hand at any point in time. And the reason why that is important, oh, I'm sorry, I don't have the document there. The reason why that is important is because it is showing how money is flowing in and out of your business. And so this particular statement is very helpful as far as helping you to manage the expectations as far as what you thought you should have in revenue. It helps keep you alert as far as the expenses you have going out. So if your payroll seems extremely high, but your revenue is low, then there may be a conversation you need to have with your team, right? Why do I have all this money going out for hours in payroll, but there's no results from that? So there may be some ineffectiveness there, right? And so it allows you to see a lot of different things as you look at it, as money comes in and as money goes out. Again, a cash flow statement is something that we can assist you with and a great way to keep up with your business. Other documents that become a part of your loan package that you should have readily available and on hand for your business anyway, in addition to your, of course, business plan and your financials, of course, is all tax returns for the business. You want to have 3 years of your tax returns of your existing business always ready and available, and especially if you're looking at or pursuing any type of funding. 3 months worth of bank statements as well. If you are a startup business, you will be providing 3 years of your personal tax returns, as well as if you have a job that you are currently working and you're still employed while you're trying to get your business off the ground. That's wonderful. That provides for the lender secondary source of income outside of the business that they are able to utilize to help you as far as in obtaining your funding. And so with that, you're providing 30 days worth of pay stubs, you're providing W-2s, and you're providing personal tax returns. You also will provide proof of your equity injection, so your 10% with that's sitting in a savings or checking account, and then legal documents that go along with your business. So the filing, the state filing with the Secretary of State's office for where you registered, your EIN numbers, your operating agreement that would go with your limited liability company, bylaws that would go with your corporation status. So all the things related to your business, you would also include lease agreements, insurance, pending contracts, contracts that are existing that's providing revenue for your business, all a part of that loan package. Here we have some sample questions to ask your lender. So the lender is going to ask you many questions as they are considering giving you funding. A lot of the material that we covered is going to help you and ask those questions. You understanding your business plan and how it how you came to the result of what your product pricing was, who your market is, how you're going to reach them. It's going to be all questions that they ask you. So if you have someone else who creates your business plan or you pay someone else to do it, make sure that you have an understanding of how that plan came together, the research that it was done to create that document for you. If you're doing it yourself, that's great, because then you have that hands-on knowledge of how you came to the information that you did. And feel free to let somebody else evaluate that too, to make sure that you are addressing everything that a lender may ask. So you want somebody who's disinterested from the business, take a look at that to give you feedback to make sure that you've not missed out on anything. But when it comes to sitting down with a lender, there's some questions that you want to ask that you may not even be aware of that you need to ask. And because just as a lender is evaluating you and looking at your credit and looking at your business plan and looking at your financials, you need to make sure that you are getting into a relationship with a lender that you are comfortable with it as well, right? So your bank or credit union is your banking partner, and they're there to help and assist you in the growth of your business. So it's important that you have a good relationship with them. So I touched on briefly loan products, terms, rates, and fees. Those are things that you want to ask questions about. I've put some in here for you. I'm not going to go over all of them, but I will point some of them out. When you talk about interest rate, you want to know if that rate is fixed or if it's variable, meaning the rate could change. So if you started at a 5% interest rate, could it go up to 7%? So you want to ask them if your rate is fixed or variable, meaning that rate can change. Then of course your payment can change, and that can affect your cash flow and ultimately your ability to be able to pay your bills. Do you lend to businesses in my industry? Oftentimes banks go through cycles of where they're a little, maybe, I hate to say, a little hesitant in lending in some industries. And so they presently may have a complete portfolio of businesses that are in your industry, and they may not be lending at that point in time. And so you want to ask those questions. No point in submitting an application to someone and it's just not something that they're considering at that point in time. So that's always very important. When will your first payment be due? Well, of course, if you are successful in securing funding, you want to know when that first payment's due so that you are able to plan for that, right? And another good one is there any prepayment penalties? Meaning that if you were to pay your loan off early, is there any additional fees that you would have to pay after the fact? So there may be fees that you're paying up front, but there also could be fees that you're paying when you pay your loan off early too. So here's a list of some questions that you can ask that go under loan products, terms, rates, and fees to help you. Questions around collateral. Again, we have a list here. I'm only going to give you a few. I think one of the ones that's really important is your loan going to be secured by your home? So if you are a homeowner and you have no interest in pledging your house as collateral, some loan products do require that your house be pledged, often a lot of SBA loans. And so you want to ask that question. Will they be looking to secure a lien against your home? So a lien meaning would be like, you don't want to consider it a mortgage, but it is a lien that if that you would go in default, then they could pursue going after your home and liquidating that to be able to pay for the business loan. Again, are you going to be required to sign as a personal guarantee? And so that might be something that you want to ask. And what kind of collateral is going to be needed for your loan, and how much collateral coverage do you need? How much collateral do you need to pledge for the loan request that you're asking for it to be sufficient? Some things around credit. Some lenders do have credit score requirements. You want to know what that credit score is. You could even ask what credit bureau that they're pulling that score from, so that you can make sure that you're checking over that bureau to make sure that there's nothing on there reporting that shouldn't be. If you've experienced any type of bankruptcy or foreclosure, you need to know the time frame that needs to have passed before you're able to apply. And also, if you have a lot of student loans, you maybe want to know how that affects you in your application for applying, as you would likely have to be a personal guarantor on your loan. I think another great question to ask is, how long will the loan application process take once they've received all the documents that are required from you? So if you are looking to start some seasonal type of business and you're thinking you're going to start next month and you're just now applying for funding, that very well could be a challenge for you, as often lenders are anywhere from 30 up to 90 days out to be able to provide funding, and that could just totally throw you off. So you want to make sure that you're speaking to lenders early enough ahead of time, that you understand their processes and you understand what who they're funding to, you understand their rates and their terms, to make sure that you're getting the funding that you need in the time frame that you are going to need it to be successful. So I'm going to wrap up with some just talking to you about different types of lenders that are out there, this capital ladder of how you can actually finance your business, as it seems often, like I'd mentioned early on, that small businesses really struggle with finding access to capital. And so first, what we find is a lot of small businesses are bootstrapping, especially women-owned businesses, where they are just saving up the money and putting money into the business over time to help grow it without getting a loan. The next would be crowdfunding. So crowdfunding is where you're asking friends and family to provide funding to you in exchange for a gift or service, or it could be crowdfunding where they're investing in you as a lender and providing you funding of which you repay them. The next step would be microlending. So there is a local microlender, ECDI, and so that's an SBA backed program. And so those are loans that try to offset the barriers that are often provided with traditional bank financing, and which they allow for a little lower credit scores. They're more open to startup businesses. They have some other supplemental programming that goes along with shortfalls for collateral if you don't have enough collateral coverage. And so microlending is a great program to help as far as getting you started if you're having challenges finding capital for your business. Then there are specialty types of funding specifically for just buying a piece of equipment. So equipment financing would be something that can be considered as well. And then of course the SBA provides SBA different products that are guaranteed by the SBA to help leverage your opportunity for being able to secure funding, and then traditional bank funding as well. And so Kiva is like a crowdfunding. First Financial Bank has a microloan program. The ECDI that I mentioned has a microloan, and Axion, and so forth. Huntington has a modified version of an SBA program called Lift. And then you have the SBA backed programs. We have Kimba, so Financial Credit Union is also great as far as providing funding for small businesses, as well as Huntington Bank and some other banks as well too. So this is just an example of many just to give you an idea of how you can access capital if you've been having any challenges. So there are some great funding opportunities with the SBDC. So in addition to the services that we provide as far as training and the one-on-one counseling, we also provide funding opportunities. And if you did not know that and was not aware of that, the SBDC has a micro lending program in partnership with First Financial Bank. This program provides funding up to $10,000. It is for startup and existing businesses. The funds carry a fixed interest rate for a period of time, which is 48 months. It does not have a prepayment penalty, and borrowers have just 6 months to draw the money down off an approved loan. Then borrowers can only have one microloan on this program at a time. This funding comes through me as a lead on this program with the SBDC. So if you're interested in the First Financial Bank program, that's something that we can talk about. In addition to that, the SBDC is a partner with Kiva. We are the hub for Kiva Columbus, and Kiva is a crowdfunding program. It's not like traditional crowdfunding where you're providing a service or a product for a certain amount of donation. It is a program that allows you to rally your friends and family and community to support you and become an investor in your business. They don't get equity. They're just providing funding for you in amounts as small as $25 that you repay back to them over a period of time. This funding for businesses that are just getting started usually ranges up to about $300 to $6,500. For existing businesses, it goes as high as $15,000. And you can borrow on Kiva over and over again. There's no interest rates, there is no fees, and there is definitely no prepayment penalties for paying the loan off early. It is simply a platform that allows you the opportunity to be able to utilize it to rally friends and family to support you. There's some other great loan programs out there, micro lenders, like I mentioned, the ECDI, the local micro lender here, SBA programs, state programs, and bank programs that are available to assist you that you may not be aware of. So ECDI, Economic Community Development Institute, located on Old Leonard, has capital for construction programs. So if you're in construction, they have a program for that. They have veteran loan programs. Not that it's a grant, but it is acknowledgement. If you are a veteran, they have a loan program for you. They have rural loan programs for U.S. development, USDA. They have refugee micro enterprise programs. They have SBA programs other than the microloan called the Community Advantage 7A. And I'm going to talk about that a little bit, which is a great program for startup and existing for inventory supplies and working capital. They do support startup businesses up to $75,000. They have a Franklin County loan fund as well. So if you're in Franklin County, they have some funding opportunities there. And then of course they did support the PPP loan as well. So they are our local micro lender here in Columbus. Axion is a micro lender, also supported by the SBA. You can find them online. They've been around for several years. They're also a great lender for startups and existing businesses. They're more so credit score driven, but they're very easy to work with. And then when it comes to the SBA products, remember we were saying that SBA does not typically lend directly unless it's a disaster. They provide their funding through guarantees, meaning they're supporting certain loan products. The loan products the SBA support is a 7A and a 504. And you guys are going to get a copy of this presentation so you can look at this information more. But the real difference is that 7A is typically used for working capital and inventory, small equipment, equipment that's not licensed. It's smaller loan amounts, but still up to 5 million, right? Requires 10 to 15% down, so less money down. Typically has a little 5 to 10 year maturity dates. When you think about a 504 loan through SBA, that is more so for large equipment with titles or real estate, which has longer terms up to 25 years, requires more of a down payment and an investment from a community capital development corporation. So that's very high level about these programs. But if you're a startup, the program you want to look at is the SBA 7A. If you are an existing business looking to grow, looking to buy real estate, looking to purchase large equipment, then you're looking at the 504. Huntington just recently came out, I think it was last year, with the Huntington's Lift local program. This is in support of African-American businesses, women-owned businesses, veteran-owned businesses. And what this is really an SBA 7A backed program, but they've added some bells and perks and whistles to this. And so there's 0% origination fee. A lot of SBA loan programs do have some upfront fee. They've provided some financial education courses to assist you as well. They've offered a free checking account. It's a the credit underwriting on this is more flexible than the traditional standard SBA program. So this is a great program that Huntington Lift is now offering to serve disadvantaged businesses. Kimba, local financial credit union, has some great business products as well. Common sense approach to underwriting in helping you as a startup or an existing business. They have term loans, meaning that the loan is fixed for a certain period of time. They have revolving lines of credit, meaning that you can borrow on it over and over again. They also can assist you if you're looking to purchase commercial real estate and even a business Visa account. So Kimba is there to help and support you, and Kimba is a supporter for us of the Kiva program as well. The state of Ohio, and we're going to wrap this up so that you can ask your questions. The state of Ohio also offers some programs as well through the Department of Development. They have their newly released Ohio Microloan programs that is for women and for minority-owned businesses. It does require you to have a minority business enterprise certification. They'd like for you to have a women's business enterprise certification, but it is not required. Those certifications can be obtained through Department of Development. The Minority Business Assistance Center is your go-to in helping you to obtain these certifications and others. Certifications like these help position you for government contracts and other opportunities with corporations and businesses that are just simply looking to support minority, women, and veteran type businesses. So these are great new programs just rolled out through the Department of Development, the Ohio Microloan Program. The funds can be used for operations of the business, for machinery, equipment purchases, leasehold improvements. That's basically rehabbing your rental property, not investment property, but if you're renting a brick and mortar space for your business, of which you're selling your product or service out of, it can be used for that, as well as inventory. The application process begins with you reaching out to staff at the Minority Biz Finance at development.ohio.gov. The Ohio Minority Business Direct Loan Program is also through the Ohio Department of Development. It's been around for many years. And this is, again, a program that is specific to minority business enterprise businesses that are looking to create jobs in Ohio. So if you are looking to create jobs in Ohio and you're looking for some funding opportunities for you, the Ohio Minority Business Direct Loan Program might be something that fits your needs. We do have a grant. So this grant is being offered to you through the Columbus-Franklin County Small Business Recovery Fund. It's a partnership with the City of Columbus, Franklin County, the Small Business Development Center, and the Wells Foundation is bringing you this grant opportunity for small businesses that have been impacted by COVID, that have been in existence since March 17, 2020, have experienced a 25% loss in sales. So that's not your profit and loss. That is the loss in sales that you've generated from the sale of your product or service. To be able to obtain a grant for your business to help you and getting through these troubling times. The grant opens back up, I believe it's May 25th, but if you go to the website, it'll keep it's up to date there as far as when you'll be able to apply for this. And again, this is for existing businesses that have been in existence since March 17th, 2020. The SBDC provides, in addition to this general overview that we've provided to you this evening, a more in-depth loan packaging class that you can take, again, so you can reach out to us for one-on-one advice and assistance, where we can sit down with you and go over your loan package and help you prepare for seeking funding. But in addition to that, we also have a loan prep class that goes over a lot of this information presented to you this evening and more. And then we also provide to you at the end of the year in December, so we'll send something out as we get closer to that time frame, a save the date, in regards to our capital crash course. So this is an opportunity for you to come together with lenders in your community, to talk to them about your business, to learn more about the financing opportunities that they have. And this is brought to you through the Small Business Development Center. As we come to the end, I want to just provide to you some just helpful tips. So whenever you're talking to the bank, and even in your business plan that you present to them, you want to be brief and to the point, and it needs to be easy to read. It's important that you emphasize the strength of your management, that you talk about your skills, even if you've never run a business before, how your current skills will lead to the success of your business. For where you fall short, the expertise that you'll bring, be it someone that you hire or any partners that are involved, or even if it's your advisory board. Your loan package should be presented attractively with projections that paint a realistic picture with sustained assumptions. So your assumptions are how you feel that you're going to be able to generate those sales, to be able to generate the revenue, right? And so that all needs to be detailed out. And that really is done through a marketing strategy. Again, we could help you and assist you with that too. Throughout the presentation, throughout your loan package, and in your conversation with your lender, you are always weaving in the fact that you're going to be able to pay that money back and how you're going to be able to do so. Always, of course, be sure to proofread your package to make sure that grammar and spelling is all correct, and the style meets the appropriate audience. The bottom line is that you are having to convince the lender that you and your business are a good risk, which means you need to know about your business. You need to know about your business plan. You need to know how much money you need. You need to know what that money is going to be used for and how you're going to repay it. Your character, capacity, and collateral, among other credit factors, will be considered in making the lending decision on your behalf. So it's not just one, it's many. So you want to make sure that you're prepping ahead of time to make sure that you have already dealt with any issues that you need to, or have addressed them in your loan package before you present that information to your lender. And finally, learn from your mistakes. If you get rejected from a lender, that is not the end all be all. It just may not be their preference at this point in time. Ask questions, find out why they reject you, talk to the lender, understand where they're coming from, fix the mistakes, and go to the next lender. So we are the Ohio Small Business Development Center. You can reach us at our website, which is sbdccolumbus.com. You can email us at sbdc@cscc.edu, or you can call us at 614-287-5294. This is a part of an opportunity offered to you through the Columbus Chamber and the Minority Business Assistance Center in partnership with the Ohio Small Business Development Center, as we are presenting to you National Small Business Week Procurement Series. Our next session will be coming up on May 5th from 11:45 to 1, doing business with public agencies. If you are interested in doing business with local government and state entities, I encourage you to join this presentation. If that's not where you're at currently, but it is something that you foresee as a future goal of yours, please join. You'll want to join these kinds of opportunities over and over again to understand the process and to find out the connections that you will want at these different agencies. We've provided to you a code for you to be able to, QR code for you to be able to open your smartphone, your camera, and be able to scan that to be able to complete a survey for us as well. And if you'll do that, we'd greatly appreciate that too. And do we have finally any questions? And then I'm going to stop sharing.
I have a question.
Yes.
First, I want to say thank you for presenting, and this was some wonderful, wonderful information.
Thank you.
You're welcome. The question that I have for you is in regards to the microloan. I missed I think it was the first financial bank. I know you were saying it was like for 10,000, and you said that comes through you guys. Can you talk a little bit more on that and how someone could go about getting that type of loan?
Yes, Bruce, if you'll drop my email in the chat for me, I'd greatly appreciate that. My colleague Bruce Walters is on the webinar with us this evening. For the first financial bank opportunity for the microloan, you just need to simply reach out to me. We'll schedule an appointment to talk through that program, to talk about the guidelines and review the application And if that is something you want to pursue and it meets your needs, then we would provide you the application and you would move forward in obtaining that funding. The funding under the microloan program through First Financial Bank is limited, so it is first come, first serve. There's a bit of a qualifying process, but again, it's something that's been put in place to help provide access to capital for those that are finding challenges with just going after traditional financing and really are not needing a lot of money, but 10,000 does the trick, and not having to go through because regardless if you're looking at funding with a bank or credit union, there's a lot of paperwork that goes along with that. And with this particular funding, you don't have as much paperwork to just access the 10. So reach out to me. Short answer, reach out to me, and then I can
okay.
set the next steps.
Thank you so much. And just one more question that I have, and I'm done. I was really interested in attending the session on Friday, and I noticed that it's in person. Is there anything that I can do to try to get into that? Because I saw that it was sold out online.
I'm going to let Sharice answer that.
That's awesome. Give me your email address if you don't mind putting it in the chat, and you can make it private to me if you would like, and we can get that taken care of for you.
Awesome. Thank you so much.
Thank you.
Hey, Ellen.
Yes.
Hey, I just wanted to, I didn't necessarily have a question. I just want to introduce myself to the group on the call. I'm Ty Barksdale. I'm the SBA lending manager at Kimba Financial Credit Union. I had a bit of a conflict. I had originally thought this was tomorrow night, so I apologize. I hopped on late. I just wanted to say, like I was on from 6:30 on. There was a lot of really good stuff in there. I've been an SBA lender for 15 of my 20 years in banking. There's a lot of really good advice in there on how to be prepared no matter what bank or credit union you go to. I'd be happy to share my contact info with Ellen if anybody and I'll put it out in the chat. I do 7A lending and 504, which you touched on, and some other things. But if you need a resource or want to run something by or get a lender's point of view or a second opinion, feel free to reach out to me at any point. And I look forward to getting the replay so I can watch the parts I missed. But yeah, it was a lot of really good stuff, Ellen.
Okay, thank you, Ty. I didn't see you there. So Ty, Kimba Credit Union, as I mentioned before, is a partner of ours who is helping to support and uplift Kiva. Kiva is another great opportunity for the young lady that asked about the 10,000 through First Financial Bank. It again is the crowdfunding platform that you're able to use to reach out to friends and family, and that's also another quick, easy way to access funds fairly quick without having to have a really in-depth business plan. It's really more so your executive summary that gets you access to that. And so if you have not done so, feel free to watch our webinar on Kiva Columbus. Is there any other questions? Anything that was in the chat? I'm having some internet issues, so I'm hoping that you were able to get all of the information.
Okay, I think we're okay.
Oh, okay, so no questions then. Okay, so Sharice, did you want to share the QC code again before we leave and just reiterate taking the survey and then the next event?
So I did indeed put the link in the chat. So I think that might be easier, and I'll add it again. And we would love for you to take the survey. It helps us know how well we did. We know Ellen knocked it out of the park, but it just helps us to know that. And also it helps us to know if we were to do this again, you know, what we could add, take away, so forth and so on. And Ellen gave great information about the event tomorrow. I believe most of you are registered. I did look through the chat and I see a few of you have asked to join the Friday event as well. I've taken your name and information and added you. You should receive an invitation soon. So that's all I have for logistics. Ellen, you want to close this out?
Yes. So I encourage you as small business owners to take advantage of the resources that are available to you. Many of the resources that are offered in Columbus and surrounding are offered to you for free. So the Small Business Development Center, our trainings and services are offered for free. There's very few classes that we charge any fee for at all. And if we do charge a fee, it's very minimal. Same thing with the Minority Business Assistance Center that is located at the Columbus Urban League, that they provide assistance as far as counseling and training and assistance with certifications. Again, these services are offered to you for free. The Columbus Chamber is your voice for small business. And so if you've not done so and looked into membership with them to see how you can use them to connect and stay engaged, and for the different resources that they offer as well, like this event this evening, please do so. So my point is that there's no reason for you not to know something about anything that you need to know to be successful in running and operating your business, because there's probably an agency out there, the SBA, the SCORE, SBDC, the Women's Business Center, Minority Business Assistance Center, the Columbus Chamber, that is providing trainings and counseling to assist you. So please take advantage of those resources to help you so that you're not making mistakes that you could have avoided. And with that, I'm closing this evening. Thank you all for joining us. Have a wonderful rest of your evening.